Okay, good evening, guys. So today I got on the ETF that we might be having eyes on. That is quite interesting, and that is RIET, which is the Hold Your Capital High Dividend Yield ETF. So it's kind of is a firm that provides ETF for investors, which is the equity traded funds, right? So they invest in indexes and other sectors, and they give investors opportunity to also invest in it. You understand? So that is why it's called equity traded funds, which are funds that are put together in order to diversify the investment. All right. So let's analyze this. Now, from what I'm seeing right here, I'm seeing a very clean confirmation that price wants to accumulate on REIT. Now, it is very interesting that the price is $10.80, which is $10.80, which is something that we can actually risk, right? We can risk $10, can't you? Okay, so from this point, we are having a markdown. You can actually see this swing point for me from this point: high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. We trade back up again. We have a sweep on this high, and we refuse to break a low, and then price starts to accumulate, and we now start to print an internal structure which violates the external high. We have the hunt on this previous high, right? But price didn't break the demand or the swing low that responsible to push the price higher to hunt the high. So we have an accumulation phase and a shift of trend. So be expecting price to trade higher to the price of $12, break it, and when you break it, we're expecting it to pull backwards if it has to or not, and then we're having the accumulation going on, and that will be the markup for us to run the trade. So the target will be $18. All right, so we'll be having our icon of an eye right there. So starting from the monthly time frame, you can actually see how price has been trading, right? So we have every area of sell side inefficiency filled up right here, right? So we feel that area of imbalance, and then we have another imbalance form right here, which also have an order block, which is this bullish order block, and that was what price traded into the first time. All right, then it's sold off. Now if you look very closely what price did here, what it actually did was that it swept an area of support. You can actually see the double tap right there. There's an area of support, and remember, when we're having area of support, that means we're having sell side liquidity pool. There's a pool of liquidity resting on this low. So when price trades into the imbalance of the sell side, it's sold, and then we swept that liquidity. So we are now buying orders of we are now buying these sell orders, which is the stop loss below this area of support, which is liquidity pool for us. So it impulsively trades higher back into the inefficiency, sweeping this high. Now this sell candle that was responsible to trade lower to sweep that liquidity pool and activate a buy, that is an order block, and you can see how price trades into it. We consolidate, and we finally have a confirmation inside the order block, which is the hunt that occurred inside the order block. Now when price trade back into this inefficiency, if you were expecting to see a sell, you would have seen it break this low, but in this case it did not, leaving a swing low, and price trades higher. So this area of sell side inefficiency has been filled up, and we are now expecting the buy to occur, and seeing this has an accumulation phase for us to trade higher. All right, so let's just forget this higher time frame because it is all compact or compressed. So we see it clearly from the monthly time frame down to the daily time frame. So let's run to the weekly time frame. So this is the weekly time frame, and you can actually see what I call right here. This is the old block. We have also the sales inefficiency that got violated. Price broke out of it, trade backwards into this demand zone or an old block, and we have a clean hunt right there on that demand zone. Right, so we have in sweep of liquidity again, and price trades higher, violating this high. There is a confirmation entry of an old block being valid. We came back into the buy side inefficiency and the demand zone, so we are now having this high, this low. We trade higher again, we have this high, and price trade backwards into this old block or demand zone right there, and that is at an area of 79 Fibonacci level. Okay, you actually see right there 59 Fibonacci level. So we'll be expecting is to trade higher, and we drawn to the buy stop where we're having this liquidity on this high, sweep that high possibly. That will be our first target, and when we have a little bit of a drawdown, we can possibly still hold. All right, and we'll see how price we like to trade high to this long-term target of $18. We still have all these highs, so if price trades higher, but this high, it retraces to an area of inefficiency or another block, then push higher to create a break of structure for bullish trend, and also creating a break of market structure which is violating this high. Okay, so it will look like this. Violates the opposing trend, retrace to create a continuation, break of structure of this high, and then violates an opposing trend, retraces backwards, create a break of structure for continuation of trend, and then violating an opposing trend, creating a break of market structure, retraces backwards, trade higher, creates a break of structure, violating an opposite trend, which is a break market structure, retrace, and then boom. Alright, so that is the expectation of what I'm seeing right here on RIET. So they pay a dividend of how much? 0.08, which is not much, but yeah. So guys, take care and be safe.